Now to business stories. Ghana's central bank on Monday held its main interest rate steady at 30% for the second meeting in a row to try to keep inflation falling from its current level above 35%. Ghana's inflation slowed for the third consecutive month in October to 35.2% year-on-year and down from 38.1% in September and 40.1% in August. The central bank targets inflation of 8% with a margin of error of 2 percentage points either side. As an additional measure, the bank said on Monday a new unified cash reserve ratio for total deposits was being reset to 15% with effect from November 30 to address excess liquidity and give added impetus to disinflation. Bank of Ghana Governor Ernest Addison told a news conference that negotiations with bilateral creditors were progressing relatively well. And to talk about this, I'm being joined live on the news by an economist, Paul Frimpong. Good morning, Paul. Glad to have you join me.
Hi, good morning. Thank you for having me.
Now, before we proceed, can you just help us summarize Ghana's economy?
Well, that is a straightforward one. Obviously, if you track, and I'm sure you guys have been tracking, the challenges that Ghana has been going through in recent months, where even it got to a point that in May this year we had to officially enroll under the IMF program because we were virtually shut down on all fronts, both domestic and also externally, in terms of government's ability to raise the needed funding and also to be able to meet its obligations as a result of the levels of borrowing that the government went through. We had challenges about the currency, of course, inflation were all-time high within this period. So, in a nutshell, you can see that Ghana's economy went into crisis and now building its way out of those crises.
But Paul, if you can, could you talk to me about what other macroeconomic policies we can replicate here in Nigeria being adopted in Ghana?
Well, of course, in as much as, it could have been straightforward, but it's not straightforward in the sense that, each economy and the structure that they have currently and where they are in their developmental journey. So for Ghana, we had issues about debt, so we had to deal with huge debt crisis. I don't know the levels of debt in Nigeria, and for that, we chose an approach what we call debt restructuring. So the government had to do both domestic debt restructuring and external debt restructuring. And of course, we started with domestic debt restructuring because, as they say, charity begins at home. So the government had to show that they have teeth and they can bite, and to show the external creditors that even at home, we've done our own debt restructuring, and our people have committed to, getting what we call haircuts or trying to even, leave some of their interest, and of course, spread the repayment period for the government to have a breathing space. And then from there, we're trying to deal with external debt related issues. Of course, with that, we have to deal with the bilateral levels, with country level. So Ghana had to deal with China, which had some substantial in terms of the debt that we go to China, and now we're dealing with external credits. For me, I think if we're in crisis, the best point to do is actually almost always to negotiate and communicate with the people that are involved. And for the case of Ghana, we had to deal with the domestic debt level because we were not able to meet obligations domestically. Externally too, we were not able to meet our obligation. In fact, for the first time in the history of the country, we were not able to meet our debt servicing obligation in December of last year. So the whole rumbling started from that period, that the moment you are not able to meet the debt obligation, the rating agencies started downgrading. In fact, we went to negative downgrading for some of the rating agencies. It is now that they've started picking up and they are actually upping our grading as a country. So for me, it has to be country-specific policy and program depending on where the country is in their developmental journey. I think that would be the best way to go.
Okay, Paul, you mentioned something very striking. You talked about the government. They undertook what you refer to as debt restructuring. Help us understand what this means.
So what it means is that the government at every point in time borrows money to finance the development that the country needs. And this borrowing, we classify them into two. So we have what we call domestic borrowing and we have external borrowing. So external borrowing could be whether with bilateral loans from US, from China, from UK, from all these countries. And then we have from the capital market where government raise, issue euro bonds, where we have the private, capital, private equity firms and, sovereign wealth fund investing in those bonds that the government issues. That is standard debt. And then local, we have the government securities, we all know the treasury bills and all of that. So every point in time, the government is in the market, whether through the issuance of security in the domestic market or going to the international capital market to borrow. Now, when that happens, it means that government is accumulating debt. And debt means that you're going to pay at a period, because each of this money that the government is taking, whether from domestic or external, has a maturity period that you're supposed to pay interest payment, and of course, you have to pay the principal that you're borrowing as well. So at any point in time, if the government is in a fix, if they are not able to meet the obligations of interest payment, even at that level, not to talk about even the principal, then they have to go through a process what we call restructuring. So the restructuring is where the government approaches the creditors. So if it's domestic people that invest in the government securities, the government will go to them that, okay, I took $1 billion from you guys. At this point, I'm not able to meet the obligation. So we need to restructure the terms of the loan, the terms of the debt that I raised from you. So that's what we call debt restructuring. So the government could be seeking many things at the time, depending on the kind of engagement that the government has with the creditors. So in the domestic case, first of all, government had to renegotiate the maturity period for these debt that owe domestically. So for example, if the debt were maturing in 2023, government is saying that, can you give me additional 2 years? So let's restructure the terms. And for you, allow me to pay you in the next 2 years. I'm willing to give you additional 2% or 1.5% of the interest that I'm supposed to pay you. So that debt restructure, basically. You borrowed money, you're unable to meet the obligation when the time was due, you go back to the table to restructure the terms of the agreement. That's what debt restructuring is all about. And that's what Ghana has been doing, because we had no money, we had no means to meet our debt obligations. And that could cause doom if you do not take it, because then you will not be credit worthy. Then when you get back on your feet, it will be very difficult to convince investors to invest in the economy.
All right, thank you so much for that expose, Paul Frimpong, an economist. Thank you so much.
Thank you for having me.